Hello, everyone, and welcome to MarketBeat Monday. So glad to have you with us today. It's another tough day in the market, especially for the Mag 7 and some of our AI stocks. But joining us to break it all down and talk about what to do in this kind of market are MarketBeat analysts Chris Markoch and Thomas Hughes. Guys, thank you so much for being here again today. If you are new to MarketBeat Monday, if you've never joined us for a live stream before, we are going to take a look at the stocks that you guys put in the chat. This is a live look, so we're just giving a quick overview of some of the names that you guys want to talk about right now. And Chris and Thomas, we always start out with talking about kind of what's going on in the market, what's moving the market right now today, and there are quite a bit of moves. If you take a look at what that heat map is doing today, there's some green, unlike some of last week where it was all red. There is some green today, but the Mag 7 got hit hard again. Let's talk about it. I think we already had one question in the chat already of somebody saying, what do you do when it seems like the whole market is just falling right now? What are your thoughts, Thomas? Let's start with you.
Well, what I would like to say is I think today and what we've been experiencing recently is a case of hot and cold running Trump. This morning we woke up and he was saying that it was going to be a quick end to the war in Iran. And later this day, he's hammering down again on, I'm going to blow you up if you don't sign my deal. So the market was up and now it's down. And right now the market is really just selling off on all these fears and concerns. Like what Chris has been saying before, it's kind of like whack-a-mole. Whenever the stocks pop up, people that have shares are whacking them down, selling them to take some profits off the table. And so the whole market's kind of coming down. I wrote an article about this last week. I look at the S&P 500. Right now, it is so extremely oversold on the weekly charts. It's showing a signal that has resulted in a significant rebound 100% of the time for almost over 20 years. So this is really, to me, a really great time to buy stocks. It's sometimes hard to do it when the market is like this because, there's not a lot of reasons to buy stocks other than that they're cheap. But there's lots of great values in there. And when you start digging into the stocks that are doing well or expected to do well, you see things like institutions buying or analysts doubling down on their targets, then you can start to kind of hone in on which ones are the better buys now versus some other stocks.
Yeah, Chris, I want to hear your take too, because I already see a lot of names. We've looked at some of the names that have already come in the chat early before we got started today. And a lot of these names are down. The charts are going to look pretty similar today, where we're just seeing a downtrend in so many of these names. What do you do in this kind of market, Chris?
Well, I think let's take this back 12 months. If you go back 12 months, it was a market that was, everything was going higher and it was a unicorns and rainbows market. You could throw a dart and you could find a stock that was going up and going higher. And a lot of the stocks were speculative. A lot of them were not profitable yet. Some of them were generating very little in revenue. And those stocks are getting hit hard right now because in a flight to safety, those are going to be stocks that investors are going to bail on, especially the ones that maybe came in late when the stock was up high. We call that the loose hands. They'll get out of the stock really quickly. It doesn't mean that those stocks don't have a future, but it means that right now those are going to take the biggest part of the punishment. But I agree with Thomas's point. What you've been seeing lately, especially like in the last 30 days, is you've been seeing a lot of the quality stocks. And when I say quality, I'm talking about these are companies that consistently beat on earnings. They consistently are generating higher year-over-year revenue. And in some cases, they're really good dividend payers. And they've been getting beaten down too. So this is a good time to say you have to really take a hard look at your portfolio. You have to know what you own. And if you own some of these blue chip names, now is definitely the time that, if it's trading at that point, maybe below your average cost, or even if it's trading above your average cost, it might be time to kind of nibble at those stocks a little bit and get a little bit and do a little bit more accumulation while it's down now. And if you're looking at some of these speculative stocks, it might just be time to sit tight on the sidelines. I'm not saying sell it. I'm just saying it might be time to sit on the sidelines and just wait on them, especially if you believe in the story. But you have to understand that right now they're going to get punished pretty hard.
Well, speaking of speculative stocks, I'm going to have you start there, Chris. I'm going to have you talk about USAR in a little bit. First, I want to have Thomas talk about some of the memory stocks out there. Again, the Mag 7 are some of the stocks that got hit the hardest, but within the Mag 7, you look at some of the memory stocks and they are down so much right now. Micron really stood out to me today. This one is down 10% in a day, over 15% down in 5 days of trading. So a lot of moves on this name. It's one of the biggest memory stocks we've been talking about for a while, Thomas. So why are we seeing memory stocks get hit right now?
Well, memory stocks are getting hit because of, I think it was Google's announcement last week for a turbo quant. It's just a way to use data and memory with AI models that's more efficient, uses less memory space. So it raised a lot of raised a lot of concerns that we wouldn't need as much memory as we think we do right now. But really, what it all means is that AI models will just be more efficient. We'll be able to do more with the models we have, be able to run more applications with the same gear. What I've been hearing now too is that this kind of technology will help us advance the AI models to the point where they'll just use so much more data that it won't matter, and that we're still going to need to use these chips. So again, some concerns, valid concerns, but the sell-off is irrational. It's being driven in part by this Trump news and this soft market in general. And so they've got an additional catalyst. So you see some additional downside. Micron being the leader, it made the biggest move. When the market comes back, it'll make the biggest move again when it rebounds. This stock's outlook is pretty fantastic. The growth is ridiculous. No reason to think that it's going to stop. AI is just going to get stronger and stronger as we go. So anything that we do to make it more efficient, like turbo quant, is just really going to help the market long term, I think.
I'm going to rapid fire through some of the other memory stocks in a minute, Thomas, but I want you to talk about that really quick with Micron in particular, that right now it's crashing the hardest because it's one of the bigger ones out there, and you say it's going to rebound the quickest too. All of these moves, is it based on any real fundamentals? You look at MU's earnings. I mean, the earnings are there. The outlook is there. Are these moves based on anything real other than that fear that you're talking about?
Strictly based on fear, because the fundamentals are still very much intact. And I can say this about the entire S&P 500. If you think or believe as I do that the S&P 500 is driven by the earnings outlook, then right now the fundamentals are about as strong as they can be. We're still looking for earnings growth. The trajectory of growth is still positive in that we're going to see acceleration from quarter to quarter to quarter, this quarter and the next couple of quarters, and the estimates are rising. The last data that I saw showed several hundred basis points of improvements across the next 4 quarters as far as the earnings outlook goes. So to me, that's a triple tailwind with growth, a positive trajectory, and upward revisions. To me, this market is ready to move higher. It just needs a catalyst that could come any day. Maybe it won't come, but until then, right now, the outlook is still very much bullish to me, and this pullback would definitely be a buying opportunity.
Again, this is a question that probably applies to many of the stocks we're going to talk about today, Thomas, but I want to talk about, I think the fear that people have with buying a stock like this that's down at this point is this the bottom? Could MU fall even further? Is it done falling yet? And do you want to buy in? I think that's the question that a lot of investors have. What are your thoughts on that?
Well, it could always fall further. The chart is pretty ugly. We've got 3 solid weeks of selling, but in this outlook, it is still a good buy now. Would it be a better buy tomorrow or next week? Maybe. But the way that we're looking, or the way that things are looking, the stock was going to rise by several triple-digit amounts from its recent high. So anything below 440 is a good buy. Right now, we're like 25% down from the highs. So to me, it's a pretty good buy. But as far as when you pull the trigger, the best thing to do is just wait for the price action to start reflect the market is buying. And when you see the other market participants begin to buy, then you can start nibbling, and eventually you'll probably see a really strong entry signal where some news event triggers a really clear buying event that's followed by a high volume spike on the volume bar, and all of those things together will tell you like this really is like the best time to buy.
All right, very good. One quick thing to point out before we move on to some of the other memory stocks. MU, most recent price targets, both of those came on the 19th, so just a few days ago. They had it moving over $500, one at $550, one at $530. So that would be a big turnaround from where the stock is trading right now today if those price targets, the most recent ones, are at all accurate, right?
Right.
Yeah. So
and again, looking right here on this chart, Micron's recent high comes with a convergent extreme peak in the MACD. So to me, that says that this market will absolutely retest the 440 level and most likely set a new high, strictly based on the technical outlook.
Just rapid fire through some of the other names. So SNDK, this one's down about 17% in the last 5 days. That's SanDisk. We've got Seagate down 13% in the last 5 days. Obviously, they're all trading very similar. Western Digital down as well, also down about 15%. Is your advice the same for all of these well-known names out there?
It looks pretty good for the entire memory complex. Each of these stocks has a different, specialty within memory. Some are DRAM, some are some are longer term, some are shorter term memories. Some are more for like memory sticks. Some are for storing hard data for long periods of time. Some are more for short-term memory usage. But they're all being supported by AI. AI needs it all. And any of those applications that aren't AI really specific are still being impacted by AI because demand across the memory chip landscape is just so great that it's really impacting all areas of memory.
All right, very good. Well, I'm going to have you look up one of those lesser known ones. That's RMBS. I'll have you cover that one next, Thomas. That's another memory stock, but this is a name that somebody asked about early on. Chris, we are moving on to what is happening in the rare earth metals area. And along with USAR, we had people asking about MP. We had people asking about some of the other rare earths too. So let's get to some of those as well.
Okay, well, I was looking at USAR before we came on, and so the story here is the long-term story is very bullish for USAR. I mean, this is competing in an area that we've talked about on the channel before. We need more rare earth elements. There aren't enough of them, and we also want to bring that supply chain onshore to the United States. USAR is the opportunity to do that. The risk here is simply it's a speculative stock. It's execution dependent. Right now, a lot of the funding for it is coming from the U.S. government, and it's also now part of this volatile commodity cycle. A lot of reasons why you can like the stock right now. The chart looks it's approaching oversold levels, but I would also put a little caveat in there that it looked oversold coming into the year, and then it rose a little bit, and it found its ceiling, looks like in early February, and it went right back down again. So again, I think it's an example of that whack-a-mole. We'll call it my theory, is my whack-a-mole theory of what's going on in the economy right now what's going on in the market, right now, is that, it popped up, it got hot, and then it got knocked down again. Investors have to remember, this is a company making very little revenue right now. It's not profitable yet. I'm not saying it's a bad company. We're dealing in that hard asset space, and again, in an area like rare earth metals, where we need them and we can't get enough of them. But I think it's a stock that investors are going to have to be patient on if they want to play in this. If they want to play the stock right now.
Yeah, I think that the patience is the question with this one, and really all of the rare earth names that I want to look at really quick. I'm just going to pull up MP2. How long is the time horizon on these stocks? I think that's everyone's question. There's a lot of volatility right now. I think that volatility likely going to continue. I don't think that's going away anytime soon. But when might we see the returns that analysts are expecting? When we were looking at USAR, I mean, the analyst price target have that stock doubling by the end of these are supposed to be, 12-month to 18-month price targets. MP, kind of the same deal. MP's also down 23% in the last month. Analysts are also very bullish on that one. That one has a consensus price target that would have it up almost 73%. So when could those gains be realized? Is now a time to get in, or is that volatility just going to be sticking around for a long time with a lot of these names?
Well, I think some of that's going to depend on what type of gain do you expect, and in what time frame do you expect it? Because the key for all of these companies, what we're talking about with MP and what we're talking about with USAR, is going to come down to execution. MP doubled. They ramped up their production in 2025. They doubled their oxide output. There's a lot of reasons to be bullish about these stocks, but they have to execute, and we're going to find that out in the coming earnings reports of are they successfully executing on their plan?
All right, very good. That's a good look at those. I do want to pop up just because somebody asked about LAC. I just want to see if LAC's chart is any different, but I'm assuming it's going to be.
Lithium America, yeah.
Yeah, it'll probably be very much the same. It's not down quite as sharply as some of the others have been. This one's down just 6% the last 5 days, but the last month down 25%. Would you group this one right in with the last conversation that we just had on the other two stocks?
Yeah, probably. I think this is a case. Maybe taking a bit of maybe just taking a step backwards. I think a lot of investors can look at it this way. Right before the hostilities with Iran started, oil was down and a lot of other commodities were up, like rare earths, like gold and silver and such. And now that dynamic's been flipped. Oil's up, they're down. I'm not saying it's as simple as that, but I think that's a good way for investors to think about that. If oil prices come down, I think you're going to see a lot of these other plays come up, because again, the broader theme here is we need these, we don't have enough of them, and we're trying to onshore it, and these companies are trying to help us do that. But right now, they're smacking up right against oil, and that's a tough play.
All right, Chris. The next one I'm going to have you look up is Rubrik, RBRK.
Yeah.
Look up that stock real quick. Thomas, let's get on to the smaller memory stock, RMBS. What do you think about this one?
Yeah, Rambus, I like this stock. Its position in AI is pretty secure, I think, because it makes a lot of controllers that help connect the memory to the processors. So you think that there's a GPU that does processing or that has the memory and does all the advanced AI kind of thinking, and then there's a process that really runs the applications. Rambus products kind of connect those two things together, helping to prevent bottlenecks and latency, help speed things up. So I think that it's got a pretty robust outlook. Again, it's just being impacted by this fear that that memory won't be as in demand as it seems to be. But I think that we'll soon see some evidence to the contrary in the upcoming reports. So in about a month, we'll start seeing some more reports come out, and I think those are just going to reaffirm the spending outlook. I think that in general, we'll see all of these chip stocks rebounding.
All right, very good. Thomas, I'm going to have you look up EVTL next. And while you're at it, why don't you look up Joby and Archer too for a quick little update on that eVTOL sector. So EVTL for you. Chris, let's get to Rubrik. What's happening with that?
So Rubrik, so we're talking about cybersecurity here, and that that right there sort of tells the tale a little bit about what's going on, because you've seen it happen with a lot of other cybersecurity stocks over the past, actually probably over the past couple of weeks, even into the last month. They're part of this AI software fear trade and what's going to happen with that. But I've noticed in the last week or so, you're starting to see, at least from what I'm hearing from the analysts, you're starting to hear some of the sentiment change around that. You're seeing stocks like, let's just say some of the big names like CrowdStrike and Palo Alto that have just been beaten down. And most analysts are saying it's just gotten too far, that the need for cybersecurity is going to be enhanced by AI, it's not threatened by AI. And so now let's get back to Rubrik. Rubrik's a smaller name in this space. Those names, what's going to happen? They're going to get punished harder than some of the bigger names because their market caps are smaller and they're just going to get beaten down more. I think that's really what's been happening with Rubrik. But again, I think this is a story that the company IPO'd, I think in 2024, if I remember correctly.
Yeah, that's what I was just looking at the all-time on this one.
Yeah, so, if investors are I know the analysts are projecting, I think somewhere around 89 as a price target, but that's going to be below the all-time high. But you're going to have to want to see what happens with this company. I think as long as these companies continue to deliver on earnings, I think you're going to see a strong story. One thing I like about Rubrik when I glanced at it was the company's already started becoming profitable on an adjusted EPS basis. They're growing revenue year over year. So cybersecurity is a space where there's room for a lot of names, and Rubrik could be one of them. But again, it's going to get punished harder than some of the bigger names, and some of the big names have been punished pretty strongly. But I think the cybersecurity, the cybersecurity bears are running out of steam right now.
Yeah. One thing just to point out on Rubrik, this is at the
Yeah.
very bottom of its 52-week range, and we don't
Yes.
see that often. It is, this is the lowest the stock has been in the last
Yeah.
year. So that's an interesting time to look at. Do you, you mentioned this a little bit, but is now
Yeah.
a good entry point for this stock to recover, or do you think that this is a falling knife where this is just going to continue to move lower?
I think that this is a spot where investors could come in and start looking at it as a buy. And again, I think you just pointed it out very well. It's at the bottom of its 52-week range. When you look at the RSI, it's approaching oversold conditions. The question that I would have if I were an investor is what would be the bump? Because it's been down in oversold conditions before, and it popped up to around 60, and then it went back down again. Now, to go to 60 from where it's at now is over a 20% gain. Yes, actually more than that. So, you just have to be careful here because, again, I think this is going to be, until we get a lot of clarity about what's going on in the Middle East, I think you're going to see a lot of these stocks that might pop up, and then as soon as they pop up, they're going to get knocked back down. So investors are going to have to be careful here, especially if you're thinking about investing it and not trading it.
Very good. All right, Chris, I'm going to have you look up HELP next, HELP.
Sure.
That's your next one. All right, let's get to yours, Thomas. What did you see about this sector-wide? Let's just talk about what eVTOLs have been doing recently.
All right. So EVTL, Vertical Aerospace, Joby, and Archer are really all suffering from the same thing, which is cash burn and dilution. Right now, it looks like none of them are really great buys at the moment. Probably all going to be heading lower, all certainly suffering from these problems and not expected to stop anytime soon. Of the three, Joby is probably the only one that would be viable when they bottom. It is expected to get type certification this year and commence commercial operations. Archer's facing delays, might not be certified until 2028. And Vertical Aerospace is the farthest behind of all three. So within that, don't expect a whole lot in the near term. Certainly, if Joby starts to produce some more good news, the other stocks could accelerate their declines as investors move money from them into Joby. Joby itself is down pretty good from where it was. It seems like it could rebound. You see what the analysts are saying, but I think they've been trimming targets, so that's kind of, capping gains, putting some downward pressure on the market.
I see that the consensus price target is still high, but then you look at a recent one, we've got a pretty high $18 price target from 3 different analysts this year already. So these aren't old price targets. These are newer ones for Joby anyway.
Yeah. Right. So it's really conflicting because we've got higher price targets, but a really weak sentiment rating. Yeah, so Joby's kind of in this limbo period. It seems like it's setting up for a rebound, but it is suffering from dilution and cash burn. Right now, I would consider it a wait and see, a watch list stock. Wait and see for it to put in a bottom and produce some news and trigger a buying event. And until then, there's certainly going to be a risk of downside movement.
Yeah, this is the downside I want to talk about a little bit. So we looked at Joby's chart. We look at Archer's chart. This is down 30% in a month. We look at Vertical Aerospace. This is down 25% in 5 days, 53% in a month. And this is a stock that we were talking about quite a bit when the whole eVTOL story was a thing, that this was an up-and-coming name that could potentially catch. I think one of our analysts we had on the show said this could potentially catch up to Joby and Archer, or even beat them with the technology that they have. And so to see a stock crash out this hard, if you happen to be holding this stock, what are your thoughts for those investors?
Well, looking at the news stream here, Vertical has got the worst cash burn. It's got the worst cash crunch. It just announced $850 million in new funding, and it's the furthest away from certification. So this one is certainly going to be a cash burning stock. That's why the stock is down as much as it is right now within the space. Even though theoretically the technology is better, it's a better company. It's a much longer runway to commercialization. A lot of opportunity for them to just to go out of business. So certainly would be a very speculative stock if you were going to buy this one. But to me, it's a sit on the fence and watch and see what happens.
It's so hard to look at what's happening in the price action with these stocks and then look at the analyst price targets. I mean, this one has an $11 consensus price target when it's under a $2 stock right now. The high price targets on this one are $15. So do these price targets mean anything right now with what's happening in this sector?
Well, I mean, theoretically they do, because there is an outlook for these businesses, and this business especially, to commercialize itself. But the trends are all down right now. I see downgrades and reduced targets. So they're resetting, and right. So the most recent ones were this month. That was in anticipation of this dilutive effort. So these guys are still pretty hopeful. But again, this is a very speculative stock. I'm sure that none of their clients are holding too much of it, because there is still going to be a great risk of dilution in the future.
All right, a good look at that sector. Thanks for the update. I'm going to have you look up Datavault next, DVLT. We had a couple people ask about that. Chris, let's get to help. What is this stock?
Well, this is a biotech stock, and we talk about these a lot, Bridget. And there's some that I like, and I have to say that I'm a little bit more skeptical about this one. The company is Cybin. They are they're a clinical stage biotech. They're focused on psychedelic therapies for the treatment of generalized anxiety and depression. The story here is the company has products that are in clinical stage trials right now. They just reported out phase 2 data on their lead candidate, but they're years away from commercialization. There is still some concern about how aggressively the FDA is going to move on approving these drugs. There is sort of that black box area that comes with psychedelics that some people are concerned about. The bigger issue from an investor standpoint is the companies had to raise a lot of cash to get the drugs as far as they are. And there's a more than likely outlook that they're going to have to raise more to get these drugs across the finish line, which could still be several years away. It's just one of those things that right now, with so many other things going on in the market, there's just probably better options out there for investors, for traders even.
I feel like we ignore it, and maybe I missed you say it, but the elephant in the room on this one is what the consensus price target is. This is wild.
No, you didn't. We didn't skip it. I just saw it, Bridget. I'm scratching my head about that one a little bit, because I don't see any FDA events coming up with the company. And here's something that would concern me if I were even thinking about trading help stock, any other than trying to short it, is they just came out with what was considered fairly positive phase 2 data just a couple of days ago, and the stock is still dropping. So I'm not really sure what these analysts are seeing, other than the fact that they might be looking at the stock as saying it's, if they can get one of these drugs into market, then the sky is the limit, especially, because it's playing in that area of mental health. But I'm not seeing it right now. Again, the stock they're just probably going to have to raise more cash to get their drug through the phase 3 trials and beyond. And then even when they get through phase 3, it's going to be, they've got to get it to commercialize. To me, the best option for the company is probably if they get bought out, but that is pure speculation right there.
All right, very good. Chris, I'm going to have you move on to FSLY. FSLY. Thomas, let's get over to Datavault. This is a name we talk about often on the show. Again, really quick, if you are not a subscriber to MarketBeat, we would love to have you subscribe to MarketBeat. It means a lot to our channel to have more names subscribed. The more you can like our videos, give us a quick comment just to let us know that you're watching. Let me know what you want to talk about next on all of our regular videos too. We do the live streams on Monday, and I post a video every week, or almost every day of the week. So I hope that you join us for all of those too, and subscribe to the channel if you haven't yet. It means a lot. Thanks again, everyone, for being here. We've still got about 20 to 30 minutes left. We try to go for about an hour on MarketBeat Monday, so we're not going anywhere. Just a quick little commercial break. All right, Thomas, let's get over to Data Vault. Again, this is a name a lot of our viewers have been talking about for a while after a video we did maybe 6 months ago. Are we seeing any changes or catalysts for Data Vault right now?
Well, it seems like it's starting to get some traction. There has been some business. The last report, it showed a little bit of profits. The guidance for the coming year is fairly optimistic. So it seems like it could be turning a corner. However, still nothing in the chart or the other data that reflects time to buy yet. So price action, 1, 2, 3, 4, about 2-3 weeks ago, we have an abandoned baby. That's where the market gapped higher, created a small little doji candle, and then the next day it gapped lower. So we have this little itty bitty weak candle up here by itself that's been abandoned. That's marking the top of this trading range. Since then, the price action has drifted lower. 1, 2, 3, 4, 5. So 7 days consecutively drifting lower. Doesn't inspire me to want to buy this stock. Then I go and look at analysts are optimistic, but there's just 2 of them. They're really mixed. Institutions have been buying, and it seems like they're ramping their activity, but they just own 0.66% of the stock. So that's really not very much activity at all. Meanwhile, short interest is also still very high, weighing on the market, probably involved with this abandoned baby signal. So right now, what I'm seeing is a market that it's still capped, still under pressure, still has plenty of risk. As we go through this year and the subsequent reports come out and we start seeing some traction actually being developed, the market might strengthen. It seems like the company has enough money to get through the next year. The question is, will it be able to build momentum and generate sufficient cash flow to continue investing and not need to raise more money? Because if raising more capital comes into the picture, I would say that short interest will probably spike again and just weigh on the market and keep it from moving higher.
Yeah, this is a very risky name right now. I think that's why people keep asking about it, wondering what to do with this name or not.
I know. It seems interesting. It seems like it should be able to do more, but I'm starting to kind of think about it as being kind of like a GameStop stock, where it's like it's got this idea that maybe it can do something with, but doesn't really seem to be doing it.
Yeah, that's
that
for
makes
sure.
sense.
Yeah. All right, let's go on to a new name that's been mentioned a few different times, AXTI. Have you look up AXTI. All right, Chris, on to you. We are looking at FSLY. What is this one?
Yeah. So this is Fastly. The company is, so this is Edge Cloud platform. It's been soaring because of the expectation that, that narrative of edge computing adoption was coming into play. Company's been showcasing some new products recently. It is one of the leading names in the space. They've been growing revenue very consistently. They've been growing earnings. Right now, the stock looks like it's gotten well above its consensus price target. I was looking at that and saying that sort of surprised me. And so now I think it's a question of, I think the stock might be just be pulling back a little bit here since it did soar so high. Again, I think the long-term story here is good. There is some competition in this space, and Fastly sort of plays in that ground, a little bit like it's squeezed between Cloudflare and a company like AKAM. So they're kind of sandwiched in between there. But again, I think this is an area where there's room for more. There's room for more than one company. It seems to be a company that's attracting the interest of customers. So it's building its customer base. I think this is just a standard little pullback that's happening right now with the stock. But I think, again, when I look at what the analyst price targets are, some of the consensus targets, even the most bullish ones, are pretty significantly below the $25 that we're at right now. So that might be something that investors might want to watch.
All right, very good, Chris. I'm going to have you look up SENS next, SENS.
Okay.
All right, Thomas, on to AXTI. What is this company?
This to me looks like another good one. They're in the semiconductor industry, and what they're doing is making wafers out of the non-standard materials like gallium and oh my gosh, what are they called? Silicon carbide. You know, the higher capacity, higher, more durable, higher powered semiconductors used for a lot of manufacturing, IoT, solar panels, a lot of electronic connectivities. Really important for data centers because of the high power uses that they have. So to me, this is a good company and a good industry. Stock price certainly reflects a pretty strong market. Today's action shows a top, so we'll look for some consolidation over the next few days, coming weeks. But right now, the rally is supported by increasing volume. We've got strong momentum. Let's see here. All right, analysts are kind of cool on it right now.
I say, yeah, I've got a couple of follow-ups here. Looking at this one, I see the analysts are cool. Like it's trading way above where those consensus price targets are. I also see short interest isn't that high on it. Ownership is only about 50% from institutions. It's really just the run-up that's been so wild to look at, to see a almost 3,500% return. And no wonder somebody said this was their biggest winner of the last year. That makes sense. Sure. This has done really well.
So it looks like a market that got ahead of itself. So a bullish story, bullish trends, bullish ownership, but the market got well above those consensus price targets, and now it's pulling back. Mm-hmm. So what'll probably happen is some consolidation, some sideways movement while the market kind of advances to where the stock is, where the company's results kind of grow into where the valuation is. And as long as those things stay in alignment, the stock price should probably move sideways, maybe a little bit down, but down to sideways until it hits those support targets around the moving averages. Those will probably provide support over time and then reinvigorate the rally. So it'll just be a matter of how long it takes for the consolidation to work its way through, and for the results to kind of grow into where the stock valuation is.
All right, very good. There are so many different names coming in the chat. It's hard to know where to go next. I'm going to have you look up PNG and Teradine. This is TER. I'm going to have you look up both of those, PNG and then Teradine, which is just a good update on that one. Let's get over to Chris. Chris, we are looking at SENS, SENS. What did you find about this company?
We are. So I don't know. I'm not sure. Did we talk about this last week? It seems like we did.
We might have. I don't remember.
So this is the company that they've got the long-term implantable continuous glucose monitoring system, the CGM system. This is a story. So if we said it last week, I'm probably going to be telling investors something I said something very similar to last week. It's a fairly, I should say, I guess it's a large addressable market. The question is how much of that market's already being taken up. Their core product is their EverSense system. This is the continuous glucose monitor. The adoption of this has been slower than investors had hoped for. You've already got companies like Abbott and Dexcom that are dominating this market. Both of those companies have products that are non-invasive. The product for Senseonics requires a minor surgical incision. What you're lacking with the stock right now, it seems like for a lot of investors, is you're just lacking a lot of clarity on when the growth might come. I don't think people are doubting that the growth potential is there, but they're not seeing it. And that's what's putting the stock under pressure right now, especially since it's a company that is still burning cash. So we've talked about this a lot, and it seems like a recurring theme with the stocks you're giving me today. It's a stock that's burning cash, and a lot of investors just, they're not going to be very patient with that right now in this market.
Yeah. I think in general right now, the stock's getting hurt the worst, and they have the worst outlook for rebound, or not making revenue, not making money, burning capital.
Yep.
Yeah, I think that's very true. And there's a lot of names that come up that people want to hear about these speculative names
Yeah.
on MarketBeat Monday. I think we're not choosing the stocks to talk about. These are stocks that people are asking to talk about. And most of the time, they're these smaller speculative names that people are interested in hearing about. And you're right, they are absolutely getting hit right now pretty hard. On that note, I think the next one I'm going to have you look into, Chris, is talking about some of these smaller drone companies that are getting hit pretty hard. We have had the Dragonfly, we have a Dragonfly drone CEO on a few times. That stock's got hit hard. It sounds like Kratos, I think that one's in the drone space as well. So Kratos, ONDS, and Red Cat might actually be getting a bounce from one of the comments. Somebody said maybe that's potential, but have you look up that sector as a whole so we can talk about that for a little bit. Let's move on to the two stocks that you're looking at, Thomas. We'll start with PNG. What's this one?
So that's Kraken. Kraken Robotics. We also know this one by KRKNF. That's the penny stock in America. P&G is the Canadian listing. But this is an underwater robotics company. It's been experiencing accelerating growth, and I think it's got some profits to talk about too. I'm checking that real fast. But just seeing some more affirmations with follow-on products, follow-on orders. And right now, the war in Iran is kind of highlighting the company's position as an undersea operator, because trying to clear the Strait of Hormuz is going to require a lot of sonar technology, a lot of underwater robotics to clear mines, and that's what Kraken's products do. The top headline in the news stream is a new $24 million worth of defense contracts that spread across several clients, different countries, including defense contractors, all really affirming the company's ability to produce and provide in this environment. So to me, this is a good stock. The stock price is down right now, so it looks like it's setting up a buying opportunity. And I think I would need to check on this still, but I think the company is still, trying to work on a dual listing, which is expected to help improve its exposure, not only for business, but also for investment. Dual listing with a stronger listing in the United States would help, attract institutional investors, which will help, stabilize volatility and help, keep the stock price rising over time.
All right, very good. Thomas, I'm going to have you do a big sector next. Oh, no, you know what? We've got TER. Let's do TER first, and then we'll get on kind of into the sector I want you to talk about. TER. Right.
So that stock is down again today, too. Also in consolidation. But right now, that consolidation looks like a pretty bullish. We're above the midpoint of the long green candle, which occurred in February, following a pretty strong rally. So it looks like a pretty good chart to me. Can't remember exactly what Teradyne does.
I think this is a testing company, if I remember right. This company helps with testing to make sure.
Manufacturing.
I think so. Something with the build out.
Yeah.
The build out.
So they help with the manufacturing process and quality control with semiconductors. Totally. So totally invested in the AI boom, in the onshoring of American manufacturing capacity. So to me, the chart action is a consolidation. You're going to want to wait for it to play itself out. But these kind of consolidations usually are followed by very clear continuation signals. The market will either break to the upside, break to the downside. When you get that signal, that will be the time to start really piling some money into it.
All right, on the AI data center build out note, we had several people asking about some of the data center names that are all really not doing well right now. So Applied Digital, IREN was another one, APLD, IREN. I'm not sure if there's others that fall in that boat. I think BE was another one that somebody said is in the similar sector. So I'll have you look up those three and see if your thoughts are, if there is a turnaround coming, if it's a risky time to be getting in, is it time to be buying the dip on any of those names? So look up those. Let's get to drones. What are your thoughts on what's happening in this sector, Chris?
Well, bullish on the sector. It's been a rough week for a lot of the names. You brought up Red Cat, and I'm a little bit, I'd have to know what people were saying in the comments about it, because Red Cat was down over 8% today. So,
wow.
And then that's followed through with a lot of the other stocks in the sector, even when you start looking at some of the quote unquote established names, if you will, like Aero Environment and Kratos, everything's down. And I think that's just a case of some profit taking that's happening in the last week or so. People are looking for profits wherever they can get them. And certainly right now would be the time that investors are thinking, if I can take some cash off, take some risk off the table, I'm going to do that. Certainly nothing wrong with that. A lot of these drone stocks have made big moves in the last 12 months. Now would be appropriate time to do that. I think when I look at the sector long term, I'm still very bullish on it. I'm still bullish on all of the names that you just talked about before you threw it to me, were Air Environment, Kratos, Red Cat, even a company like Ondas, I'm still pretty bullish on. We're seeing right now with what's going on in Iran, what's been going on with Russia and Ukraine now for the better part of, nearly 4 years now, that you're seeing drone warfare is the future, and it's what's going to happen. And again, it's becoming that sector where we need them. We don't have enough of them. Even though we have a lot of them, we still don't have enough of them. And there's going to be a lot of names in the sector. But I think right now what you're seeing is kind of that garden variety pullback. Investors are taking profits. I would be looking at these stocks, looking at attractive price levels right now and looking to get back into them.
I think my biggest question with this sector, because like you said, they're all trading together. They're all down right now. To see Red Cat, that's been such a successful stock for so many people, down 27% in 5 days is a huge drop for this name that's been doing so well. The timing seems so strange to me. Why these drone stocks in a time when we're seeing an increase in warfare, we're seeing the importance of drones? Are we seeing a pullback in drones? Is there any direct correlation between why the drone stocks as a sector might be going down at a time when war is making headlines?
Yeah, I touched on it, Bridget, and I'll say it again. My belief is that you look at if you take the wider view, a stock like Red Cat, let's just stick on that one for a second. It's up 96%, even with the pullback. It's up 96% in the last 12 months. It's up, even with the pullback, it's up 46% years to date, up 48% in the last 3 months. That's a huge gain. And I think right now you just have a lot of investors that are saying, you know what, I'm going to take some profit, take some money off the table. Let's keep in mind, again, sticking on Red Cat for a second, this is still a $1.4 billion stock. So even with all of that run up in the stock price, it's still a $1.4 billion stock. That's still a small cap stock. It's a small stock. So I think investors are probably doing the sensible thing. They're taking some risk off the table, and then they're going to let the stock right up again. I don't see a reason to say that this is a sector that you're going to want to get out of. And again, keep in mind, a stock like Red Cat has short interest of, I think the last time I looked at it was over 20%.
Yeah, it's 25% right now. I was just looking at that.
So when the selling starts, the selling is going to accelerate. And so again, you look at a small cap name like Red Cat, it's just going to get hit harder because it's got that much short interest on it. And it's only got about, I'm looking now, it's only got about 38% institutional ownership. So institutions like it, there's about twice the amount of buying as there is to selling. But once those short sellers get involved, when the stock goes down, it accelerates. Again, but I think unlike some of the other stocks you've thrown to me today, this is one where I say I'm bullish on the sector. I think this is just a garden variety. Investors are taking some profits right now, and investors just need to be. It might be frustrating if you're an investor that's looking at this as a long-term buy, thinking, am I wrong in my thesis? My answer is I don't believe you're wrong in the thesis. I think this is just one of those times where the stock's taking a little bit of a breather. If it's dipped below where your cost average is, you might want to consider accumulating right now. But I don't see any fundamental weakness in the sector.
Yeah. Somebody had in the chat had also asked about Redwire. I'm grouping it in, even though Redwire is more of a space stock than a drone stock, but it's seen about the same thing right now. Chris, are you also bullish on the space industry, even if we're seeing a pullback in that sector? Do you see that sector taking off in the future?
I do. And again, for a lot of the same reason why I think the drone stocks are going to be taken off. We are seeing the fact that there is a concerted effort to build a space infrastructure, to build a lunar infrastructure, to have manned trips to Mars coming up in not too distant future. Space is a big industry. It's a big business. It's kind of funny you bring this up, Rich, because every time we talk about space stock, I think about I was at dinner with a friend of mine about 4 years ago, and I was sitting next to his boss's wife, and she she worked at NASA, and she was asking me when she found out what I did. Do you know about space stocks? And I was like, well, what are you talking about? Are you talking about like Rocket Lab? And she started mentioning all these other ones that we're talking about. I'm like, oh no, I didn't. And so this was 4 years ago. So you can imagine, yeah, it's big business right now. And I think, again, if you're seeing a pullback in these stocks, it's a buying opportunity. It's a chance to accumulate.
All right, very good. And if you are interested in space stocks in general, we have a really great special report out. Thomas wrote this one. This is the 7 space stocks that are the best ones to own in 2026. If you haven't checked out that free report, you can find that. You can scan the QR code or just go to the link right here. It's marketbeat.com/space stocks and check out that free report that Thomas wrote with 7 of his favorite space stocks to look at. Chris, one of the last sectors I want you to look at, somebody just put this in recently. I know there's a lot of names we didn't get to. Again, I say this every week, but I wish I could get to everything everyone wants to talk about. But I think we'd be here for hours if I got to every name in the chat that we have. But somebody brought up one that I caught my eye late last week, and that's what's happening in the credit cards. So looking at MasterCard and Visa, look at what's happening in those stocks and what is happening in that industry too. I saw that was interesting to look at. So MA and V. All right, Thomas,
okay.
Let's get to you. What's going on in the data center rental space?
Well, right. So this is a combination that we see it across all the stocks in the universe: debt levels, dilution, and execution risk. So there's really immense demand for these products and these data centers that aren't fully built or fully built out, and the companies are taking on like large amounts of debt to pay for them. And there's a lot of execution risk. So that's got the market feeling kind of cold right now when they're selling off. It's the same thing driving Oracle. Oracle is really the leading, data center as a service company right now, building out billions in data centers, but its stock is down really, really hard because it's having to raise massive amounts of capital through debt and through dilution to pay for it. So that being said, the backlogs are like this big and the debt is like this big. So risk versus reward. You think about that and look at this pullback and say, it's probably a buying opportunity. So again, just let the pullback, play itself out, wait for the market to start showing some support. When you start seeing some clear indications of buying, it'll be time to start buying the stocks again. When we get some good news following that, the markets will be rebounding.
Yeah, I think this one, I think you explained it really well with the backlog. There is risk with all of the investment it takes to build these things, but the demand is also there. And I want to talk about that with Applied Digital in general. I had Iron pulled up here too while you were talking, looking at how much that's pulled back. Applied Digital had a tremendous growth story this year. It's still up 260% for the year. So still a great growth story, but it's down 27% in 5 days. So a huge drop for this stock. But I think at last earnings report, they had such a big beat. And do we expect that to come up again? I think their earnings are coming up in just a little bit here, maybe next week.
Yeah, I would expect to see another, great report because they have been, their first projects have been coming online. They've been realizing the revenue from those projects coming online. They've been building their second phase. So I think it'll be a good report. They should have really strong revenue. They should show signs of profitability. They should probably reveal some new contracts and talk about a third campus. So to me, I think that the results will probably be a buying opportunity, a catalyst for a buying opportunity.
Well, and that's what I'm wondering is even if the market is doing what it's doing and we continue to see this volatility, this downtrend, the reactionary news based off of what's happening with the war and things like that, do you think a strong earnings report for Applied Digital could give a bounce in all of these stocks? So could we see a bounce in APLD and Iron on a good earnings report, or is there too much chaos happening that even a good report won't bring the bounce that we would normally expect?
Well, I would think that a good report would help put a bottom in all the stocks because they're all being affected by the same fears. They're all being affected by the same long-term fundamental outlooks. So if we get some affirmation of that outlook, it should help put the bottom in the market. But that being said, right now the market's not really wanting to buy stocks. So it's possible that we could just see these stocks continue to wallow until, later this year. Eventually we'll get tired of the war. The war will be over. Something else will happen. But right now there certainly are some headwinds for sentiment and for stock prices to be rebounding.
All right, good. Thomas, I had enough requests. I'm going to have you look up SoundHound and give a quick update to end on that one, Thomas. All right, Chris, let's look at what's happening in the credit card space. What did you find with these two stocks?
Yeah, they're both down 6%, 4% respectively, Visa and Mastercard in the last month. But they're down year to date. And I think a lot of this has to do with, this is a consumer story here. We're talking about interest rates that are certainly looking like they're going to stay higher for longer. And as long as that's the case, it could put some stress on these companies, especially because if you are trying to reach that lower income consumer, they're probably going to be less inclined to use their credit cards if they're going to have more trouble paying off the balances on those cards. So I think that's really why you're seeing the pressure on these stocks right now. Again, I don't think the long-term story changes. I mean, I think there's some rumblings out there about how stable coins might impact them. I think we're a ways away from seeing anything that would be really harmful to these companies. And in any case, a company like Visa, I know, is already trying to adopt some of the payment rails and trying to adopt stable coins into their ecosystem. But I think this is just a consumer story. And it's a story about interest rates and where they're headed, and therefore what the health of the consumer is going to be, especially the consumer on the lower leg of that K.
I know at the very beginning of the show, Chris, you mentioned look at those blue chip stocks. If they're down right now and you believe in the company, this might be a time to load up on them. I look at both MasterCard and especially Visa. Visa's trading near its 52-week low right now, very much so, of its range. They both have strong dividends. They're both companies that have been around for forever. Would these names qualify as those blue chip stocks to load up on or to add to your portfolio during a dip like this? Or is there too much uncertainty with the broader economy that these could continue to get impacted?
I would certainly think that their stocks worth accumulating right now. I'm not going to sit there and say you might want to go all in on them. I don't think the dividends are that good, but I think certainly when you pointed out, Bridget, that these stocks are trading down near their 52-week lows, you're probably looking at some investors who are seeing prices on these stocks that they probably haven't seen in a long time. And again, now, personal opinion here is, my view is that at some point this year, interest rates are going to go lower. I don't know how much lower, but they're going to go lower, and that would be bullish for the stocks. But again, that's an opinion of one, and other people have justifiably, they take the other side of that bet, and that's fine too.
Chris, I'm going to field one more question from the chat. Somebody asked, how do you think interest rates or potentially spikes or potential recession could impact the market? You kind of answered that a little bit, but do you foresee any other moves in the market and specifically moves on stocks like this or any stocks we talked about today based on what happens to interest rates this year?
Yeah, well, I think so I think if there were going to be interest rate hikes, I think that would be that's going to be damaging to the lower end of the K. It's the K-shaped economy. I know people get tired of hearing about that, but it's a thing, and the consumers on the lower end of that K are going to get hurt by anything that's going to put pressure on their price, because they don't have the buying power. And if you increase the interest rates on them, it's not going to affect the upper side. It's going to affect the lower leg of that K. And I think that could put pressure on stocks as well. I mean, the stock market is not the economy, but again, it could put, when you look at stocks like MasterCard, Visa, it's clear that their stocks are falling because people are noticing that consumers are probably looking to put less on their credit cards. And that, again, is that lower leg is not going to have access to the same amount of credit, because MasterCard and Visa aren't going to be likely to issue as much credit to consumers that they feel are higher risk. So I think it's a big risk to the economy. Again, my personal opinion is rates are going to be going down at some point this year. I don't believe they're going to go up, but again, I could be wrong. And there's a lot of people who have strong opinions on the other side of that. And again, I'm not talking about what should happen. I'm talking about what I believe will happen.
All right, very good. We are going so long today. Thanks for staying with us a little bit longer, guys. Or Thomas, let's get on to the last one, and that is SoundHound. And this chart is ugly. It's been ugly for a while, and it keeps getting uglier.
This is a stock that I really believed in. I thought it was going to be doing a lot better than it did the last year or so. But what we have are a combination of factors that start with concerns about profitability and cash burn and dilution that have led to 35% short interest, compounded by insider selling and an executive shakeup. So there's just not a lot of reasons for retail investors to be happy. And any of them that are in the mix trying to buy this stock are being outweighed by all these other forces. Right now, it looks like the market could continue to fall, but the guidance for the year was pretty solid. I think we could get some good news coming up, trigger a rebound. But right now, it's not looking real hopeful. What can I say? I'm disappointed with this one. I thought that SoundHound was going to do a lot better.
Yeah, I know the consensus. I mean, it doesn't look like you're alone, Thomas, either. There are analysts who have seemed very bullish on the future of this company, and so it will be interesting to see if it does ever take it anywhere. We have that price target reduction recently from $26 to $20, so the analysts are moving the targets down, but they're still
Right.
significantly higher from where the stock is trading right now.
Right. Piper's at 9. Yeah, that's kind of a mixed range, but generally still pretty optimistic. And we're looking at a moderate buy, more than 50% bias. Consensus is 15. So, I mean, there certainly is potential for a rebound, but right now, the other market forces, short sellers, dilution are totally against the stock, and there's not a catalyst. So the upcoming results could be a catalyst. But until then, I'd be real cautious. Wait for that to happen and see what happens, and then start making some moves.
All right, very good. Well, thank you guys for staying a little bit late today. I so appreciate your time every week. And thank you for joining us here on MarketBeat Monday. A lot of really great suggestions, so many things to talk about with the market moving as much as it's moving right now. We so appreciate everyone joining us in the chat. Sorry if I didn't get to you this week. I hope I can get to more of you next week. Thanks again for watching. Hang in there. If it's been a rough week in the market, I think you're not alone. There's a lot of people feeling that right now. Thanks for watching, and we'll see you again next week.